Craig Dismuke is Chief Economic Strategist at Vining Sparks. That's a global broker-dealer that trades $230 billion a year. Craig, good to have you here on Street Smart. Good afternoon.
Good afternoon. Thanks.
So the unemployment rate and payroll numbers, they're not telling the whole story. Why is that in your view?
Well, when we look at the labor data, we're trying to get an idea from an economic standpoint of what kind of consumption is being created.
Right.
And the unemployment rate by itself, all we look at is how many people answer to the BLS surveys, yes, I'm unemployed and I'm looking for work. And then we take that and divide it by the number of folks that are working plus the number of folks that answer, yes, I'm looking for work. So there's a whole segment of the population that it doesn't take into account. And those are the people that are not looking for work and they're not working. Those are considered not in the labor force. And so analysts recognize this, and so we do a different calculation called the labor force participation
rate. I'm going to slow
rate.
you down a little bit because I think this is great stuff, but we've got some charts to kind of help our viewers make sense of it. So talk to me about your formula again. It's called the jobs population ratio, correct? So we're going to bring some stuff up to help everybody kind of explain it. So explain it again a little bit here.
What we do is we look at how many full-time jobs there are outstanding. Then we look at how many self-employed and then part-time jobs.
Okay.
And we add those together. We multiply part-time jobs times 0.5, recognizing that maybe they're 10 hours a week, maybe they're 35 hours a week. On average, let's say they're 20 hours. And then we take that and divide it by the total civilian population. And that gives us an idea of how many jobs there are out there to support the number of people who are consuming services and goods.
And that's what we care about because we're a consumption-led economy.
We want to know how much consumption is possible, the future of consumption. And so if I can use an analogy, I like to compare it to a family of four where you have two people that are working. And there's a couple things that can happen. You can have one person that quits working and is no longer looking for a job. And the unemployment rate then would still stay unchanged because that person's out of the labor force now.
Right.
But the reality is that family only has one job that's providing for the family. You could also have both people who are employed become employed part-time from full-time jobs, and the unemployment rate would not change because we still show them as being employed.
But they're only part-time work.
Right. So you have less consumption ability.
We've got another chart because that formula, your formula called the jobs population ratio, kind of gives you another chart, and this shows a massive drop over the recent recession. We'll bring it up for everybody. I mean, it's a pretty depressing number that we're looking at, aren't we?
Right, and the unemployment rate has fallen from 9.8% in October. It's come back down to, was it 9%? Now it's back up to 9.1%. And that makes it look like we've started to rebound, or there's a little bit of improvement in the labor market. But when you take this separate calculation that we do to try to get an idea of how many jobs are out there as a percentage of the population, it doesn't show the rebound. There's two things it shows me. Number one, it hasn't bounced like the unemployment rate has. And number two, it's as bad as it's been since 1982. So we're currently at 57.4%. So what that tells me is from 1980, 1990.
This is it, right?
This is it, yes.
So tell me what we're seeing here.
Well, this shows the number of jobs that are existing as a percentage of the total civilian population.
Right, your formula.
Right, and so it's 57.4% currently. That's as bad as it's been since.
So we are really low.
Right, absolutely. And it's what you had is, but in the 80s, 90s, and 2000s, you had a lot of families that went from single income families to dual income families. Well, as those people have fallen out of the labor force and they're no longer looking for jobs, maybe they've made the decision that we're not going to have two incomes anymore, or maybe people have retired. Either way, you have fewer people working as a percentage of the number of people that have to be supported. So from a consumption standpoint, when we look down into the future, we're not real excited about it, and that's why we think that growth is going to be weak.
Well, does what you calculate here kind of jive with what we're seeing in personal spending numbers? Does it make sense?
A little bit. It does a little bit. A lot of the jobs we've lost haven't been the higher income jobs, so you still do see some decent personal spending. But, you know, personal spending growth is weak, and when you take into account the inflation that we have right now, that's, you know, on a headline basis anyway, it's actually negative on a real basis.
Right.
So, you know, there's some real headwinds for the economy.
We've got another chart, and this is actually, and it'll stress your point even more, you are kind of flipping your ratio and superimposing it on the unemployment rate. We'll bring it up, and it's what the inverted ratio versus the unemployment rate. So talk to us about this.
Yeah, you can see how the two diverge beginning in 2010. And that's where, you know.
So that white line is the unemployment rate, and your inverted job population ratio is that yellow. So that where they're trending away from one another at the end of the chart. That says what?
Well, that tells me that the unemployment rate is not a real good barometer of what the real jobs picture is out there. When those two have separated, it tells me the unemployment rate is...
Because they track pretty closely.
Right.
Very closely correlated here.
Yep.
So, what's interesting here, Craig, I'm thinking, we're trying to really figure out what's going on in the economy. We're watching the market trade, which plays off of that. How much worse do you think the jobs picture really is, the economic outlook is?
Well, I think the jobs picture is very poor right now. I think it's structural. I don't think the Fed policies are necessarily doing anything to address that. And so I think that's a real challenge for us going forward. And that's why, when we look into the future, we feel like GDP is going to grow at a pretty slow pace, below
slow?
trend. I'd 2 to 2.5% range, which is below trend long term.
But you don't see recession?
Not necessarily. The jobs report today doesn't surprise me that much. The payroll number at 54,000 is certainly a shocker just from the headlines. But we only had 4 weeks in this calculation period. We had 5 weeks in the previous one. So if you take the 2 months and add them together, we're trending about 160,000 per month. So that's in line with where we think it probably should be. The bottom line, though, is there's so much slack out there.
There's tons.
That it's going to take a long time to get back.
We're throwing a lot at viewers, and I know it's dense, but it's pretty cool stuff. I want to bring up another chart you have, and this is what I think non-farm payrolls during the last recession, so maybe we'll bring it up for everybody. You look at this, and what do we see?
Well, you see in the 3 previous recessions, you can see how we lost jobs as the recession began. And then within roughly 2 years, we would have recouped the jobs that we lost. So this is the change in payrolls from the beginning of a recession.
Right.
And we're on 0 on the x-axis is when the recession begins. This payroll, which is shown in red, shows how, first of all, we lost about 3 times more jobs than any previous recession.
Much deeper.
Right. And this is just payrolls. But then the second part of this is we still have about 7 million to create just to get back to where we were when the recession began. So, and that doesn't take into account population growth.
Some folks, Craig, say that we're not going to see those jobs ever come back. I mean, and we're seeing structural changes in the economy. We've got to address those structural changes before we can see significant job creation to get near back those normal or so-called normal levels. Do you agree with that?
Yeah, I'm an optimist at heart. I think, generally speaking, I think all of us are. And so I would hope that long term we get them back. I don't see it in the short term. I think a lot of the job loss that's occurred so far has been structural. A lot of it's come out of the construction industry, and with housing, housing activity it's bouncing along the bottom right now. There's no activity there. The good news is that there's nowhere to go but up. So, at some point, if housing comes back, then maybe we can see some of that job creation coming back. But with the amount of distressed inventory that still has to work through the system, it's going to be a long time before housing comes back.
Yeah, it certainly looks pretty dismal. Craig, thank you so much. A lot of charts, but you walked us through them really nicely. Thank you so much.
Sure, thanks.
Craig Dismuke, Chief Economic Strategist over at Vining Sparks.